Ted, this is important for you to call out because apparently a lot of people aren't aware of it. But first and foremost, thanks for coming on as usual. Before we get to the idea of the balance transfer, can we just talk about where credit card debt is right now, how it's expanded over the last 12 months or so?
Yeah, it's actually very topical because breaking news just 20 minutes ago, the New York Fed put out its quarterly report on household debt and credit, and it showed a new record for credit card balances, unfortunately,
Ugh.
$986 billion. Dollars. That's up 15% over the past year. It's up 7% over the past quarter. This has now surpassed the pre-pandemic record. The previous record was back in Q4 of 2019. So credit card balances have really been shooting upward in a big way.
Yeah, I mean, it's times like this. There are a lot of things that I might disagree with when it comes to Dave Ramsey and his outlook on debt in general. But the credit card piece is just tough to justify. I know there can be a lot of benefits from a security perspective and from a points perspective, but when you hear about numbers like this and the average balances that people carry on them, it's very, very difficult to hear about. But talk to us about balance transfers because, as your study pointed out, majority of Americans have no idea how they work.
You're right. Yeah, that big fork in the road is whether or not you carry a balance. And it's roughly half and half among cardholders. If you pay in full, then yeah, you're avoiding interest, rewards are great. But if you're among those with debt, you really have to put that interest rate first. We found that 37% of people with credit card debt aren't even aware that balance transfer cards exist. And they are kind of too good to be true in a way, although, of course, they're real. But you can avoid interest for up to 21 months. And that's really the big thing.
Yeah.
You move your debt from one or more cards to a new card with a 0% promotional rate. The catch is that you have to be disciplined about paying it back. I mean, of course, the business case here is the bank's looking to bring in money that, yeah, there's a 0% rate for a while, but when the term runs out, then the rate goes way up. But if you can make sure to pay it off before that point, that's what can save you a ton of money in interest.
Ted, do you find that on average those balance transfer cards have higher interest rates once that period is up?
They often do, yeah.
Yeah.
The average for all credit cards is about 20%, and that's the average midpoint of the range that varies according to your credit. Oftentimes, among the best balance transfer cards, you might see something like 17 to 30% or
Yeah.
so once the term expires. So that can be really high. But the key, I would say, is just divide what you owe by the number of months in your 0% term. Really try to stick to that level payment plan. Don't muddy the water by adding new purchases, even if they're interest-free. I really think for the certain kind of person, this could really be a tremendous tailwind for paying off debt.
Any downsides? I mean, we've talked about the higher interest rate once the term runs out, damage to your credit report, or anything else that people need to be aware of when they're considering this?
The main downside is just if you don't pay the full amount by the end of the term, then whatever's left could be subject to a hefty interest rate. Although chances are you're already facing a hefty interest rate. So really whatever you pay down is advantageous. Hopefully pay it all if you can. There's typically a transfer fee of 3 to 5% up front. I still think that could be well worth it. A lot of people have credit card debt in the neighborhood of $5,000. So maybe the fee is a couple $100 in that example. I think the ability to avoid interest for that long really outweighs the fee.
Ted, beyond balance transfers, if people are finding themselves in just a revolving problem here, are there resources, other than the balance transfer that people should look into, and are there ones that they should be wary of too when it comes to, heavy credit card debt and things to be concerned about from? I know there's all sorts of scams and poachers out there when it comes to this sort of thing.
Nonprofit credit counseling is a really good option, especially if you have a lower credit score or you have a lot of debt and you just need some help. Reputable agencies like Money Management International and GreenPath can often get you into a debt management plan with something like a 6% rate over 4 or 5 years. What's different is for-profit debt settlement companies. That I would avoid because that really trashes your credit. They tell you to stop paying for a while. They try to negotiate a settlement. It might not work. Even if it does, there's a lot of credit score damage. So I would say nonprofit credit counseling is really good, but the for-profit debt settlement companies, I would avoid those.
Ted Rossman from Bankrate talking to us today about record levels of credit card debt out there and ways to help mitigate it. Ted, appreciate it as always. Thank you.
No problem. Thanks.